Hello Maverick traders, this is Imri and welcome to today's currency recap. It is Thursday, May 18th. Okay, so the markets are looking risk on. Equity markets for sure, that is. Crypto markets, not so much. Gold and oil also down today. So the reason that we're seeing some optimism return into equities is that there is belief now, hope, optimism that the vote on the debt ceiling could be done next week, and we're soon going to put this risk of the US default behind us. So as a result, equities are risk on. Gold, traditional safe haven, has fallen. Taking a look at the charts here, I've been talking about this trend line for a very long time now, the blue trend line that is, and I think now we finally have escape velocity. We finally popped above it, and frankly, this looks bullish, at least in the short term to me. Now, I still don't think in the bigger picture that this is going to end well. But, markets can, in the short and intermediate terms, have a mind of their own and be much more receptive to, I'd say, swings in psychology than following sound fundamentals. So my short-term target upside in the S&P right now is between 43.02 and 43.25. Taking a look at the 10-year yield, we've also jumped up and we're very close to a bullish moving average cross here. Wouldn't be surprised if over the next couple of weeks we take a run at that 4% level once more. And then finally, crypto. So we've stalled out in that resistance area that I mentioned, and I think in this crypto basket we have at least a test of 20,000, 27,000 in the cards. I'd love to see 24 or 23,000. Before crypto as a whole starts looking quite attractive from a valuation standpoint, but I'm not entirely convinced that we're going to get that low. So for now, I have my eye on 27,000. Now, in terms of the market outlook, so the slope of the averages needs to turn up a little bit more, and then we've got a full-on +3. But otherwise, things are looking pretty good right now. Now, in terms of news, tomorrow we've got Powell speaking. Around 11 a.m. Eastern time. So keep an eye out for that. If there's, I don't think there's going to be anything crazy or off the cuff to come from that. So I don't think it's necessarily going to be market moving, but it's worth paying attention to anyway. All right, heading on now into currency analysis. So kicking things off with crypto, we saw this interesting thing as there were worries about the integrity of the financial system. It seemed that a lot of the capital flows and investment flows moved out of things like treasuries and equities and even the currency, like fiat currency that is, and into crypto. And now that that trade is unwinding, we're seeing crypto suffer as a result. At least that is my theory, as to why we're seeing risk-on activity in stocks and then risk-off activity in crypto. On the fiat side of things, the yen was obviously the loser on the day, as was the Swissy and the European currencies. The other two European currencies, the euro and the pound, are more or less flat. The dollar was the big winner on the day. And again, why is that? Well, isn't the dollar a risk-off currency? Yes, but you have to keep in mind that the theme the market's been paying attention to lately has been a looming default on the part of the US, which would negatively impact the dollar, especially if there is some kind of credit downgrading. So now that those fears are subsiding, people are flocking back into the dollar. Otherwise, the Canadian dollar did quite well, as did the New Zealand dollar and the Aussie lagging. In terms of velocity, this is really interesting. We've got some things that are looking really good here, like the dollar, like the Canadian dollar and the New Zealand dollar. And I like the idea of pairing them against the Swissy, the yen, and the euro. Pretty straightforward in my opinion. Okay, let's take a look now at some possible trades. So remember last week I said we're going to take another stab in the yen towards this resistance area, and we did. We took a stab at it, we didn't break above it, and a failed buy signal turns into a very reliable sell signal. So I think we're going to head lower now in the yen basket. I think a test of the October 2022 lows is definitely in order. So weak yen matches the risk-on mood that I'm seeing in stocks. As far as the dollar goes, I think we still have a little bit more upside here. I think it's very realistic for the dollar to, at minimum, test these highs from early March 2023. But I'm starting to now consider the possibility of a measured move. So that means that between February In March of this year, the dollar basket rose roughly 6.4%, which means that I'm looking for another net 6.4% move from the recent low, this double bottom, I guess you could call it, back on May 10th. So not all that long ago, just last week, really. So that means we're still in the relatively early stages, and we still have about 2/3 of that move higher left to go in the dollar, if I'm correct on this. But I don't want to get too carried away. So my short-term target in the dollar basket is going to be those March 9th, March 8th highs. Okay, Swissy, we're testing this red support line here. I'd say this is fairly minor support, and I think we're going to crack below it. And again, I'm looking for a measured move here in the Swissy, which will carry us to where we were trading at the beginning of April 7th to be precise. In the euro, we're now drifting into support. So there might be a little bit of demand for the euro here, but I think we need to dip a little bit lower towards the bottom end of this range first. And if we break out the bottom of this range, then that puts the next gray box in play, which is from roughly 128 to 127.11. The pound, I mentioned the break below this trend line last week, and since then we really haven't done much. We've just traded sideways. Pound, not interesting for the time being. It's coiling for a big move. Canadian dollar, trying to bust out the top of this range, and I don't really see any overbought or concerning bullish divergences in the Canadian dollar. So I wouldn't be surprised to see us break and close above this resistance level, which has held the market since January of this year. Now, if that is indeed the case, then we might have some runway to buy the Canadian dollar here against some of its peers. On the other hand, if this move really fizzles out, then we're looking back towards the bottom of the range here. That's been the story of the Canadian dollar since the start of the year, basically. Okay, Aussie dollar, I said I'm looking for a break out of this blue resistance line. We got that, and we're now just chopping around. So I think we're coiling. My hunch is likely we're headed for a move higher, and I'd like to see us test the April 20th highs. So a bit of upside possible in the Aussie, but I think the New Zealand dollar is the better APAC currency to be looking at right now. So we broke out of this wedge that I've been talking about, pulled back very sharply to test that resistance line as valid support, and we're now trading higher again. So key here is the high for May 11th. If we can take that out, then yeah, I see more upside in the Kiwi dollar, and I'd be looking to test the December 13th, 2022 high. All right, so in conclusion, remain hyper-focused on velocity for any trades. I'm personally sticking to shorter-term trades now. The only exception, are there exceptions to that? I'd say the euro still has quite a bit of potential relative to the dollar to trade lower. So that's a trade that could take some time to completely unfold. But otherwise, I'm being quite tactical with my own trading, and I recommend considering the same if that's a part of your trading plan. As always, focus on proper position sizing, and given the volatility environment, please be extremely selective with your trades. All right, folks, that's it for me. Thanks for watching. I'll see you next week.